So I came across a tweet which could explain why Trump has been crashing the crypto market. I'm going to get into that in just a second. And later, there's a question that was asked by Jim Kramer that I believe every investor should be asking themselves. So make sure you guys stick around. You don't want to miss anything. Don't forget to hit the like and subscribe button if you do enjoy today's content. But let's get right into things. So as we can see, the crypto market looks extremely disgusting today. Most of these coins are red. It's just been brutal the last couple months, with the exception of that little relief rally that happened just a couple days ago, but it didn't last very long. It lasted for 24 hours, and then we're back into a complete disaster of a market, right? But the tweet that I came across was this one right here, which could explain why things are the way that they are. So it says, why Donald Trump wants the market to crash. And by the way, this was posted in my Discord group area. So shout out to CryptoZ, who actually brought this to my attention. So it says, we have $7 trillion of debt we need to pay in the next 6 months. If we do not pay it, we'll have to refinance. The Trump admin does not want to refinance at a 4% rate. The 10-year at one point this year was 4.8%. How do you get the 10-year to come down? Markets need to show weakness in growth. Doge has to be perceived as actually working. Interest rates need to come down. The way to do that is to create massive uncertainties, aka tariffs, which can slow down growth in the short term, get the bond markets to start buying bonds ASAP because of how scared they are of touching stocks, causing yields to fall, which is what we need to refinance the debt. And then that gives the Fed the authority to lower rates, which continues to bring yields down. So although conventional wisdom says tariffs are inflationary and that the 10-year should be spiking on more tariffs, it's actually going down because it's bringing so much uncertainty to equity markets that people are selling stocks and buying bonds. Interesting. This person commented, 4D chess. Now, if you guys have been following me for even just the last week, actually, you guys have heard me say how the elites have been playing chess, meanwhile, everyone else is playing checkers. You see, this seems to be short-term pain, but long-term gain, right? But who's actually feeling the short-term pain? The people that's feeling the short-term pain is the average retail investor, the people that don't have inside information. Because if you take a look here, right? And pretty much all of you already know about this by now. The person who took out a 50x leverage, they went long with 200 million using 58 leverage. The day before, or I should say less than a day, maybe like what, 12 hours or so before Trump announced that strategic reserve with Cardano, with XRP, with Solana. So the timing of their trade was completely perfect, absolutely perfect. They took out that trade on Bitcoin and Ethereum. They made $6.8 million in a matter of pretty much minutes, basically. At least that's the way that it feels like, right? And then what ended up happening was they turned around and they started to short the market. And then we got the news that the tariffs is going to continue. The tariffs is going to happen the following day. Inside trading, I'll leave it up to you guys to decide that one. But at this point, it's pretty obvious. No one can time the market that well. Using a 50x leverage, that's just absolutely incredible. And again, this is why I say they are playing chess, meanwhile, everyone else is playing checkers. See, it doesn't matter which direction the market goes because they're making money regardless. So short-term pain goes to retail investors. Meanwhile, short-term gains goes towards all the people that's manipulating the market. When you take a look at the fear and greed index sitting at 15, extreme fear, who do you think is really afraid of the crypto space right now? Who do you think fears the most? Obviously, retail investors. They see their portfolios going down day after day after day after day, and they're extremely fearful. And this is why Jim Kramer actually has a question, which I'm going to show you guys in just a second. But I believe you need to actually ask yourself this question, because this question can actually be the difference between you getting completely wiped out or you leaving the markets completely and you remaining invested in the markets, right? So make sure you guys stay around for that question in just a second. But if we take a look at the fear or not the fear and greed index, we take a look at Bitcoin's dominance, we are still over 60%, right? So the dominance doesn't seem to be coming down anytime soon. And honestly, things could get a lot worse before they get better. But for anyone that's been just investing over a long period of time, whether it be stock market or crypto market or any sort of market, then you know that this just comes with the territory. Unfortunately, there's always going to be pain along the way. Nothing goes up forever. You can't expect your portfolio to be green every single day. The crypto market rallied since like September. So September, October, November, December. It rallied for basically 4 months, and it's been coming down for the last couple months. So this is just a break, in my opinion. Nothing is financial advice. I can always be wrong at the end of the day. So it comes down to you guys doing your own research. But the question that Jim Kramer asked is this one right here. Actually, before I pull up that question, for anyone looking for a great crypto exchange, make sure you check out my link to BTCC, 10% bonus on first-time deposits, extra bonuses up to $10,000, no VPN, no KYC. The link will be down below in my description. Now let's go over what Jim Kramer actually said. So first he said this. First he says, I reiterate what I have been saying about NVIDIA, which is a stock, but it still applies to this crypto space. You'll understand in just a second. But I reiterate what I've been saying about NVIDIA to club members. There are too many people who do not know what it is or what it does. They will panic at lower levels. That's just what happens. And I completely agree with that. Now, the question here that he asks is, do we just keep selling because everyone is selling? That is a very important question that I believe all investors need to ask themselves. You see, I want you guys to ask yourself this. Why are you selling right now? Now, to some people, it seems a bit obvious. You're like, okay, well, we're selling because the tariffs, things are only going to get worse. Now, if that is the reason why you're selling, then that's okay. You've done your research, you've paid attention, and you came to that conclusion. But I can almost guarantee you that most investors are not selling because of the tariffs. Most investors are selling because other people are selling. They don't know why they invested in this coin or that coin or that coin. They just invested in those coins because the price was going up. Other people was talking about it. Other people was buying. So that's why they decide to buy those coins as well. And that is the worst approach that you can possibly do in the crypto space, especially in the crypto space. You don't buy because other people are buying. You buy because you've done your research and you actually believe in what you hold. That is the difference between someone making millions and someone making no money whatsoever. Because once the price starts coming down, you know, you're going to panic sell. It just happens. And you guys have heard me say this many times. Someone will buy at the all-time high on a coin that they did absolutely no research on and say, hey, if it comes down, I'm going to buy the dip because I'm a long-term investor. Then the coin starts to come down. They're no longer a long-term investor. They sell, and they sell because they didn't know what they were holding to begin with. So make sure you guys do your own research. Make sure you know what you hold, because if you don't know what you hold, you're not going to take advantage of these dips, these opportunities. Now, during these dip times, during these uncertain times, you have to be very strategic on how you approach these dip buying. You can't be buying every single dip. A coin falls 20% and you're like, oh, that's a dip buy. No, that's not a dip buy. You have to be very careful and very selective on how you approach these things moving forward. Right? That's the only way that you're going to keep some money in your pocket and you're going to be able to take advantage of these dips, because just like nothing rallies forever, nothing crashes forever. Eventually, there's going to be an epic bounce back. You see, some people FOMO'd into the space, or some people FOMO'd and bought probably a ton of crypto just a couple days ago after the market was rallying, right? Some people entered or re-entered into the market, probably bought things at all-time highs at that point because they thought the market was just going to continue to rally, because everyone was running around saying, hey, this is the beginning of the bull run. It's never going to come back down, and they fell for it. Some people don't learn their lessons. It's very unfortunate, but it's just the way that it is and the way that it's always going to be. But to wrap things up, don't sell because other people are selling. Sell because you believe it's the right thing to do. Only you right? Don't listen to other people. Other people will always typically steer you in the wrong direction, including me, maybe. I don't know. So again, make sure you guys do your own research because this isn't financial advice. But that's all I have. I hope you guys enjoyed this video. If you did, don't forget to hit the like and subscribe button. Check out a few of the links that I have down below. And until next time, take care.